Welcome back for another deep dive. And today we're going back in time to the early days of e-commerce, to 2002 to be exact.
About 2002.
Yeah, so we got a request to look at Jeff Bezos's shareholder letter from that year.
Oh,
It
interesting.
came along with his original one from 1997,
Okay.
and we thought, why not? Compare and contrast, see how Amazon's strategy evolved.
Right, right.
We're also going to be checking out some analyst reactions from back then, kind of see what the mood was like.
Yeah, how'd they see things playing out?
Exactly. Because, 2002, that was right after the dot-com bubble burst.
Yeah, a lot of uncertainty in the air.
Huge uncertainty,
Mhm.
is this whole internet thing, is it just a fad? Or is it the future?
A lot of people were wondering, yeah.
So our mission today is to kind of dig into this letter. What were the key principles that Amazon was focusing on back then? And were they really as groundbreaking as people claim?
Right. Are we looking at a blueprint for success here?
Yeah, exactly. So I was looking through the letter, and one thing that jumped out at me was the speed.
The speed.
Yeah, like how quickly they were turning over their inventory.
Oh, right. Bezos highlights that right away.
Yeah, it was something like 19 times a year.
19 times.
Yeah.
Which was just unheard of in traditional retail.
Yeah. Isn't selling stuff quickly the goal of any business?
Sure, but think about the logistics involved here. This is 2002,
Yeah.
right?
Yeah.
The technology wasn't what it is today.
Oh, right.
So you're talking about managing a rapidly growing catalog of products,
Okay.
getting them into warehouses, processing orders, shipping them out.
Right. The whole 9 yards.
And they were doing it all with the technology of the time, pulling that off 19 times a year.
Wow.
That's serious operational efficiency.
So even back then, they were already building the infrastructure and systems.
The groundwork, yeah, for everything that would come later.
Okay, that makes sense. So they were efficient, they were fast. But there's another thing that really stood out to me in the letter, and it almost felt like a contradiction.
A contradiction. What do you mean?
Well, they were talking about offering both the lowest prices and a world-class customer experience.
Right. It seems like you usually have to choose one or the other, right?
Yeah, like compete on price
Yeah.
or offer amazing service, but not both.
That was the conventional wisdom. But Bezos, he just went ahead and challenged that.
Head on.
He argued that customer experience, it could be a fixed cost.
A fixed cost.
More like a publishing model, actually.
Okay, wait a minute. Publishing model. I'm not following. What's that got to do with e-commerce?
Think about it this way. A publisher, they have a lot of upfront costs. Writing, editing, printing, all that.
Right.
But once they cover those costs, each additional copy, it's relatively cheap to produce.
Okay. I see where you're going with this.
So, Amazon, they invested heavily in a seamless customer experience. The website, the recommendations, easy returns.
Right. All those things.
And these were like the upfront costs, but once they were in place, the cost of serving each new customer, it went down.
So as more people shopped on Amazon.
The cost of that great experience got spread out over more people.
And that let them lower prices even further?
Exactly. It was a pretty bold move.
Yeah, definitely not how traditional retailers were thinking back then.
No, not at all.
But did it work? Did people buy into this whole low prices, great experience thing?
Well, I think the numbers speak for themselves. Bezos shared some pretty compelling stats in the letter.
Okay, like what?
For one, their fulfillment center cycle times, they improved by 17%, meaning they were getting products out the door faster.
Wow, that's a significant improvement.
Customer satisfaction also went up by 13%.
How did they measure that?
By contacts per order. So less need for customer support, basically.
Okay, so a smoother experience overall.
And they were constantly adding new products and categories.
That sounds like they were hitting on all cylinders.
They really were. But those are internal metrics, right?
True. What about something a bit more, objective?
Well, they scored an 88 on the American Customer Satisfaction Index.
Okay, I've heard of that, but wasn't 88 like...
The highest score ever recorded at the time, across any industry.
Wow, 88.
That's not just good for online retail, that's just good, period.
Yeah, that's incredible. Okay, so they were creating a better experience, getting more efficient, attracting more customer.
Which let them lower prices, which brought in even more customers.
It's like a virtuous cycle.
Precisely.
And to really drive home their commitment to low prices, they did this comparison.
Oh, yeah, I remember reading about this.
They compared prices of the 100 best-selling books of 2002.
On Amazon versus like a major book superstore chain.
Exactly. What were the results? Remind me.
Amazon was 23% cheaper overall, and it wasn't about like limited time sales or
Right,
anything.
it was just consistently lower prices.
Exactly.
So even back then, they were going head to head with the big guys and winning.
On price, for sure. But this low price strategy, it probably had its critics.
Oh, I bet. Especially after the dot-com crash.
Right. Investors were looking for profits, not just growth.
And Amazon was all about playing the long game.
Yeah. Bezos really emphasized that in the letter.
Long-term
He
thinking.
was essentially saying, trust us, we're building something sustainable, even if it means, sacrificing short-term profits.
And this wasn't just talk, right? He put his money where his mouth was.
Absolutely. He talks about how they prioritize maximizing long-term free cash flow.
Okay, free cash flow, that's one of those terms that makes my eyes glaze over a bit.
I get it.
Can you give me the ELI 5 version? What is free cash flow? Why is it so important?
Okay, so free cash flow is basically the money a company has left over
Mm.
after paying all its bills and investing in things like new equipment.
Okay.
It's the fuel that allows a company to grow, to pay down debt.
So healthy free cash flow means you're not just surviving, you're thriving.
Right. And in 2002, Amazon's free cash flow, it was surging.
So their business model was working.
They were getting more efficient. They were generating real profits.
Even if those profits weren't showing up on the traditional bottom line.
Exactly. Bezos even says, what's good for customers is good for shareholders.
It's simple but powerful.
Yeah. He was building a company that he believed was good for everyone.
Customers, employees, shareholders, all stakeholders.
Exactly.
But how did they actually put that philosophy into action? I mean, it's one thing to say it, but another thing to actually do it.
Right.
What specific steps did they take to build this, good for everyone company?
Well, that's a great question, and one we should definitely dig into.
Because it wasn't just about low prices and free shipping. There was more to it than that.
There was a whole system, a whole philosophy at work.
All right, then let's talk about how Amazon actually built this, customer-obsessed machine they were describing back in 2002.
Let's do it.
So we were talking about this idea of building a company that's good for everyone, like Bezos said.
Right, right. Customers, employees, shareholders, the whole ecosystem.
But it can't just be a slogan, right? They had to actually put it into practice.
Absolutely. And one area where that really comes through, I think, is in their approach to employee compensation.
Oh, interesting.
Okay.
So how did they handle that back in 2002?
Well, it was pretty unconventional. They really emphasized stock options as a major part of the package.
Stock options. So instead of just traditional salaries and bonuses.
Employees had a direct stake in the company's success.
So if the company did well, their stock options will become more valuable.
Exactly. It was like everyone was a mini investor in Amazon's future.
Wow. That's a powerful incentive. Did it actually affect how employees behaved?
It's hard to measure that directly, but it certainly contributed to the whole culture, the growth, the innovation.
Because they were all pulling in the same direction.
Exactly. They weren't just working for a paycheck. They were building something together.
Okay, so we've got happy customers, motivated employees, a CEO with long-term vision. But what about the stuff they were actually selling?
The products themselves.
Right. Like in 2002, they were still mainly known as an online bookstore.
Yeah. Earth's biggest bookstore, they called themselves.
But they were starting to branch out, right? Experimenting with new categories.
They had to. You couldn't just sell books forever.
So what were some of those early forays beyond books?
Well, Bezos mentions adding music in 1998.
Makes sense. A natural fit with their customer base.
Right. But it didn't stop there. They got into electronics, home goods, toys.
Toys. Wow, okay.
Even software. They were really testing the waters.
It's like they were using their expertise in e-commerce to move into, any area they could.
They were building a platform, not just a store.
But all that expansion must have come with some risks, right?
Of course. Each new category had its own challenges. Managing inventory, competing with established players.
Figuring out what customers wanted.
Right, but Amazon seemed to thrive on that. They were constantly learning, adapting.
And that's a pattern we see throughout their history, right? Always willing to try new things.
Absolutely. They weren't afraid to disrupt themselves, and that's what's kept them ahead of the game.
Look at what they're doing now with, Amazon Prime, AWS, Whole Foods. It's incredible.
It's a completely different company than it was in 2002.
But all that expansion, all that innovation, it must have required a ton of capital.
It did. And that's where their focus on free cash flow really paid off.
Okay. Back to free cash flow. So they were using the profits from their, like, core businesses.
To fund these new ventures, yeah. To experiment without putting the whole company at risk.
It's like they were building the foundation for their future empire.
Exactly. Reinvesting their earnings back into growth, into innovation. Building the infrastructure that would support this huge vision.
And it worked. I mean, it's easy to look back now and see how all the pieces fit together.
Right. But imagine reading this letter back in 2002.
It must have seemed like a huge gamble.
The dot-com bubble had just burst. People were skeptical of the whole internet thing.
But Bezos was painting this picture of a future that, honestly, most people just couldn't see.
And he was right.
Yeah, he was right. But was there anything specific in the letter that really stands out to you now?
Looking back with, the benefit of hindsight.
Yeah, like any aha moments where you thought, wow, he really called it.
There are a few, but one that really sticks with me is his emphasis on technology.
Oh, okay. How so?
He talks about how technology was driving efficiency and customer satisfaction, things that were just impossible for traditional retailers.
And this was 2002, right? Like the internet was still pretty clunky back then.
Dial-up modems, slow loading times. But Bezos saw the potential.
He saw where things were going.
He believed that making things easier, faster, more convenient for customers, that was the key.
And that focus on technology, it wasn't just about the customer-facing stuff, right?
Right. It was also about building the back-end systems, the infrastructure, the stuff most people never see.
They were building a machine, a system to deliver products to millions of people.
Quickly and efficiently.
And all of this was laid out in a shareholder letter in 2002.
It's amazing, the foresight, the conviction.
Yeah, to articulate all of this when so many people were doubting the future of the internet.
It's a testament to the power of vision.
To long-term thinking.
And to the unwavering belief in the potential of technology to change the world.
It's also a good reminder that even the most successful companies, they start somewhere.
They face challenges, they make mistakes, they have to adapt.
Amazon's story is really inspiring. They didn't just survive the dot-com crash, they thrived.
They learned from it, they doubled down on their core principles, and they came out stronger.
It's a story of resilience, innovation, and that customer obsession we keep talking about.
And it's a story that's still being written, right?
Oh, for sure. Think about how Amazon is still disrupting industries today, pushing the boundaries.
It's incredible to think about where they'll be in another 20 years.
So, to our listener who sent in this letter, thank you. It's been fascinating to go back in time and really explore this moment in Amazon's history.
It really has.
And to everyone listening, remember, the future isn't something that just happens to us.
We create it.
Through our choices, our actions, and our belief in what's possible.
Well said.
You know, we've talked about customer obsession, the long-term vision, the expansion into new categories.
Right.
But what really blows my mind is how Bezos, anticipated the future.
Oh, totally. Back in 2002, he was already talking about the internet being in its early stages.
Way early.
And how much more innovation was to come. It's kind of spooky how accurate he was.
There's one part where he talks about, how technology was letting them do things that traditional retailers just couldn't.
Yeah, like offering personalized recommendations, tracking customer behavior in real time.
And this was before smartphones, before social media, before all the data we have today.
It's crazy, right? Those analysts from back then, they wouldn't even recognize the Amazon of today.
Not even close. But here's the thing. Bezos wasn't just, reacting to the technology of the time.
He was shaping it.
Yeah, he was building their own software, their own fulfillment systems, even their own customer service infrastructure.
He knew to really disrupt things, you can't just rely on what's already out there.
You got to build your own tools.
Exactly. Create your own ecosystem.
It's like they were building a whole new world, a digital world with its own rules.
And in a way, they did, right? Think about it. How much of our lives now revolve around Amazon?
Shopping, entertainment, even cloud computing with AWS.
It's become part of the fabric of our lives. And that wasn't an accident. That was a deliberate strategy, a long-term vision.
That Bezos laid out way back in 2002. Okay, so we've covered a lot. We've talked about customer obsession, long-term thinking, operational excellence, tech innovation, employee ownership.
Woo. Yeah, it's been a deep dive.
But if you had to sum it all up, what's the one big takeaway from this letter?
For me, it's belief. Unwavering belief.
Okay, tell me more.
Bezos had this unshakable conviction in his vision, even when everyone else was panicking.
Right, after the dot-com crash.
He didn't flinch. He just doubled down, invested heavily, and never lost sight of the goal.
To build a company that would change the world.
And he did it.
He totally did. He changed how we shop, how we consume information, even how businesses operate.
It's a story that has lessons for everyone.
Yeah.
Anyone who wants to build something great.
Absolutely. So to our listener who sent in this letter, thank you. It's been a fascinating trip back in time.
Totally agree. And to everyone listening, remember, the future isn't something that just happens.
We create it.
Through our choices, our actions, and our belief in what's possible.
And on that note, thanks for joining us on this deep dive into Amazon's 2002 shareholder letter.
Until next time, keep exploring, keep learning, and keep diving deep.